Hey, it's Tim. It's 9:50. Markets are open 20 minutes here in the States, and we've had a fantastic ADP payroll number, which is at least an indication that Friday's non-farm payroll number, which is the number people are watching for sustainability of not just the U.S. economy, but really the global growth story, because it's not just about China, nor can it ever be. Fantastic number. Blew people away. Question is, is the porridge getting too hot? Is the Goldilocks scenario becoming a little tilted despite what the Fed told us yesterday in their minutes? Growth where rates need to move, and they need to move faster, and there's actually some underlying inflation currents. Well, we know that's in EM, and we know that the big moves that we've seen over the last couple of days and the currencies in EM, something that you need to watch because the inflation tells you they have to do something to change. Well, in Chile 2 years ago, they came in with $12 billion of currency to sell against buying dollars, said it was the motivation was to rebalance their FX reserves up to current levels. The reality is they wanted to weaken their currency. Brazil announced currency measures yesterday, which threw the real off almost two big figures. Again, a place where I think they are uncomfortable with the strength of their currency, and a place where I think they believe it was choking off growth. So the currency trade is what you need to continue to watch, and the dollar's move today is significant in that I don't believe this is a one-off. I think the type of strength we're seeing in numbers indicates you're beginning to see some of these big macro trades reversing, and we've been grinding and thrashing about for a couple months on some of these levels. So I don't think this is an overnight move, and I think today's labor numbers give you a bit of the catalyst to see that move. But I'm talking about dollar yen, talking about dollar Swiss, and if you look at the weakness then in a couple of commodity currencies like the Aussie dollar, these all have big implications for EM, big implications for commodities, which is a big part of EM, and something that will continue to dominate the headlines. So that's the talk for today. I think you need to continue to watch some of these macro trends. I don't think that emerging market valuations are terribly frothy here, but I do think that there's some things that are very long in the teeth or the tooth, and you want a pullback here. I don't think it's going to be significant, but I do think we are changing gears in the global economy. It's all good, but it does mean you're going to have different dynamics with rates. Thanks.